Hello, traders. Welcome to another episode of our training. This is Leading Forex YouTube channel. I am your admin, Kofi, on this channel. This is episode 23 of our tutorials, and we are on a mission. And the current position or our current location is on Candlesticks. So if you are new on this channel, join us. We're learning all this on this channel about Forex for free. Yes. So free Forex trading is what I always say. In today's video, we're going to continue from the Japanese candlesticks. And thank God we are already done with the basic Japanese candlestick patterns. And so when it comes to some candlesticks, I'm sure you can identify them by their names. The spinning tops, the marabozu, and then the dojis. Do you remember that? If you don't, then I will advise that you go and watch the episode 21. This is episode 22. So you can watch the episode 21 video or the episode 20 video, and then later on come back and watch this video. So in episode 20 or part 20 and 21, we talked about the basic Japanese candlesticks. This is actually a playlist. I'll link the link, or I will leave the link of the whole playlist at the description of this video. So you can go to the description of this video, and then you will be able to access the whole playlist, free Forex training for beginners. So you see Forex training for beginners playlist. Just click on the link, and then it will take you straight to the whole playlist. Then you can start from part 1, part 2, and come all the way to part 22 here. So at the description of this video, you will see the link to the Forex training for beginners playlist. You see the link to the whole playlist. Click on the link and enjoy the playlist. So today we are talking about single candlesticks pattern. And ladies and gentlemen, if you are ready, I'm being a commentator here. So if you're ready, I'm also ready. Let's roll. So today we are talking about Japanese candlesticks, and it is the single candlesticks pattern. Now, this is not anything new from what you have learned. It's just an idea, and you need to grab that. So listen, single candlesticks pattern. Now that you know, we are reading the notes. So let's join. Now that you know the basic candlestick patterns like the spinning tops, the marabozus, and then the dojis, let's learn how to recognize these single candlesticks in chart patterns. And we have 4 basic single Japanese candlesticks patterns. And they are the hammer, the hanging man, the inverted hammer, and then shooting star. These are the 4 basic single Japanese candlestick patterns. Now, what this note is saying is that what we're going to see very soon is not anything new, because you already know what the spinning tops are, what the marabozus are, and what the doji candles are. So these candles that you already know their names and how they look like, what we're going to see in this video is once you spot this candles, for example, the spinning top or the dojis, once you spot them in a chart, their name changes, or their name change depending on where you see them on the chart. I want to repeat this part again. Please take critical notice of what I'm saying. What this note here is saying is that we already know the candlesticks or the candles, the spinning tops, the dojis, we know them. But these candles, when they are found in certain part on the chart, or when you see them in some particular places on the MT4 or on the MT5, their name change. So you may be seeing a spinning top on the chart. The place you will find them on the chart will determine what name to be given to them or what their interpretation means. When you find a doji candle on the chart, depending on which part of the chart you find them, will determine their meaning or the name they bear. So you may see a doji candle, but maybe that doji candle is on a downtrend. So because the doji candle is on a downtrend, the name has changed from, yes, just a doji, but the name is no more going to be a doji. You may call it a hammer or a hanging man or an inverted hammer or a shooting star. And these names have meanings. Hammer has meaning. Hanging man has a meaning. Inverted hammer has a meaning. Shooting star has a meaning. So yes, it is a doji candle, all right. But that doji candle is now called a hammer because of where it is found on the chart. Am I making myself clear? Yes, it is a doji candle, but because of where this doji candle is found on the chart, this doji candle can be said to be a hanging man. Yes, this is a doji candle, but where this doji candle is found on the chart is making us call that doji candle a shooting star. Yes, we are seeing a spinning top on the chart. But because of where we are seeing the spinning top, we are calling that spinning top in the candle as maybe an inverted hammer. Please, are you getting it? This is the whole interpretation of this patterns I'm going to show you. Yes, you are seeing a spinning top on the chart, but the location where you find this spinning top has made this spinning top to be known as a hanging man or a shooting star or an inverted hammer or whatsoever. I'm sure you have gotten the meaning or what I'm trying to communicate here. And if you have gotten that, let's move on and then look at what these names mean to us as traders when we find them on the chart. Now, quickly, look at this chart here in front of you. The chart you are seeing here is demonstrating the hammer and then the hanging man to us. When you look at these two candles, this is the first one, the black one here. This is a doji candle. This is also a doji candle. They are all dojis. One is white, which is bullish. One is bearish. They are all doji candles. So where we will find them in the charts will change their name from just doji to a different name. Is that okay? So we have two doji candles. One is bullish, one is bearish. Now look at the bullish one here. This is where we can find the bullish one. This bullish doji is found on a downtrend. So when you find this doji candle on a what? A downtrend or a sell market, that doji candle is called a hammer. And why is it called a hammer? We'll explain. Now, when you see the sell doji candle in an uptrend, a buy trend, a trend that is going up, once you see that doji candle in an uptrend, that doji candle is not just a doji candle, but it is called a hanging man. I don't know why they didn't say a hanging woman. I mean, there should be gender balance, isn't it? Once we have a hanging man, we should have a hanging woman. Yeah, that's just on the lighter side of things. So I'm sure those who were writing these names didn't look at gender. If they did, they would have given us a hanging woman. That is that. Okay, back to the explanation. So these are two doji candles. When you find the bullish one in a downtrend or in a sell trend, that candle is now called a hammer. And when you find the bearish candle, which is also a doji candle, in a bullish trend, that candle is called a hanging man. Is that okay? Now let's look at their interpretation and what they mean. Whether it's a hammer or a hanging man. What do they mean? Now let's look at the notes. It says the hammer in a bullish. Are we there? Okay, let's go. It says the hammer in a bullish reversal pattern that forms during a downtrend. I take it again. The hammer is a bullish reversal pattern. Okay, it's now making sense. I was kind of reading off the notes. So the hammer is a bullish reversal pattern that forms during a downtrend. It is named hammer because the market is hammering out a bottom. The hammer is hammering out a bottom. The market is hammering out a bottom. So if I go back for you to see this explanation here, what it's saying is that we are calling this doji candle a hammer because it is hammering out a trend, which is a downtrend. It's hammering out that downtrend, making way for a new trend to be formed. That is why this doji candle here is called a hammer. It is hammering out a downtrend, making way for a new trend, which is an uptrend. And so that is why that doji candle is called a hammer. Are we good? Let's continue the note. So the note says, when the price is falling, hammers signal that the bottom is near and the price will start rising again. When price is falling, the hammer or the hammers signal that the bottom is near, meaning the hammer is just telling you that the bottom is almost near, it's almost ending. The downtrend is almost ending. The sellers are almost ending their sells. The downtrend is getting exhausted, I mean. And so the price will start rising again. So the hammer is actually hammering out the bottom, the sellers. making way for the buyers. It continues. The long lower shadow indicates that sellers pushed prices lower, but buyers were able to overcome this selling pressure and close near the open. I love this point, and I want you to take a look at it again here. Let me go back for you to see what we are saying. So the point 3 says, the long lower shadow indicates that the sellers pushed price lower, but buyers were able to overcome this selling pressure and close near the open. So look at it. So the hammer here is saying that, yes, the sellers actually came into the market. They took the trade down, but the buyers came into the market. They retraced all their sales, came back to entry point, and then they went above and closed the trade or the candle in their favor as buyers. So it means that it is a clear indication that the sellers are exhausted. They are tired. Buyers came into the market and they overpowered them. They overpowered the sellers. So that is what the interpretation here means. The hammer here means. Shall we? Good. We continue. So point 4 says, just because you see a hammer form in a downtrend doesn't mean you automatically place a buy order. More bullish confirmation is needed before it is safe to pull the trigger. So just because a hammer is formed doesn't mean that, yeah, that's it. You need more bullish confirmation. So if you look at the chart, you see that there were further bullish confirmation. This is a hammer followed by another bullish candle, followed by another bullish candle. So 3 bullish candles in a row. And that is clear enough to tell you that indeed the buyers have taken over the market. And so there's going to be further pressure up. So you don't just see a hammer and then say you are buying. You need to wait for further confirmation before you can now join. Is that clear? Let's continue. The last point says that a typical example of confirmation will be to wait for a white candle to close above the open to the right side of the hammer. Okay. Did you just understand what I have understood? It says a typical example of confirmation will be, that is the last point, will be to wait for a white candle to close above the open to the right side of the hammer. Now, let me go back. Look at it. This is what it means. It's saying that, yes, a hammer is formed, but which candle formed before the hammer? It is this one, this sell candle that was formed before the hammer came. So the last point is saying that for you to gain the confidence and say that indeed the buyers have taken over after the hammer will be to see a candle that will close above the previous sell candle. So if you look at it from that angle, the previous sell candle was this. So this was the previous sell candle. This was it. So you need the buyers to close above the previous sell candle, which will be at this level. So yes, indeed, after the hammer, the next candle couldn't close above the previous sell candle. It took the next candle to close above it. So it also closed above it. So once the buyers take control and then they close above the last sell candle to the doji, which is the hammer, then you can now buy. Am I making sense? I repeat, this is very important. This last point is very, very important. It says that for you to now buy, at what level do you buy? Yes, you have seen a hammer. At what point do you buy? Do you enter your trade buy? The point at which you can enter a buy is to wait for another candle after the hammer to close above the previous sell candle, which is this one. And if you look at it, this was the level of the last sell candle. So if you look at it, yes, the next bullish candle that came couldn't close above that sell candle. So it means you are not confident yet. It's not yet clear for you to buy until this candle, the next candle came and then closed above the previous sell candle, making way for a buy. It is as simple as that. So once a candle closes above the previous sell candle, that is your entry position. That is your entry point. That is the point at which you can buy. Are we good? Thank you. Let's quickly finish this notes. Now let's go to the other side, the hanging man. It says that the hanging man is a bearish reversal pattern that can also mark a top or strong resistant level. Let's continue. I will explain all this. When the price is rising, the formation of a hanging man indicates that sellers are beginning to outnumber buyers. The long lower shadow shows that sellers push price lower during the session. Buyers were able to push the price back up some, but only near the open. They couldn't overcome the sellers. Yes, sellers took over, came all the way down. Buyers came back, took the price back up, but they couldn't overpower the sellers. This should set off alarms, since this tells us that there are no buyers left to provide the necessary momentum to keep price rising up. So let's go back to that and then let me demonstrate that for you to see. It says this. When you look at this hanging man here, the hanging man was formed here, which means that the sellers came into the market, they took the price all the way down, and then the buyers came into the market. Don't forget the trend is a buy trend. And then sellers automatically came into the market, pushed price back down. And then the buyers came back and said, hey, what is this sellers doing? They tried to push the price back up, but they couldn't win the day. They pushed the price back up all right, but they didn't win. It still ended in favor of the sellers. So a hanging man is formed, giving you a clear indication that the buyers have finished their energy. And so the sellers will soon take over. And if that is also the case, at what point, because this is a buy trend, at what point can you sell? What will be your entry? You also have to consider the last bullish candle, which is here. Let me clear and do it. You consider the last bullish candle. The sellers must come and then the candle must close below the last bullish candle. So this is the last bullish candle. I want to draw this well so that, let me get a straight line to draw this. This is the level of the last bullish candle. This is the level, isn't it? This is the level. Can you see that? So it means that you need the sellers to come and break below the last bullish candle before the hanging man. So once you have that, then look at the third candle. The third candle actually closed below the last bullish candle. So this is your entry point here to start selling downwards. So your entry point is here at this level, because this one has broken and closed below the last bullish candle. So this is your entry point to start selling. After the hanging man, you need strong sell candles that will close below the last bullish candle. And once that happens, that is your entry point to start selling. Are we good? If you love what you are seeing so far, please subscribe to this channel. More videos are coming. All right, let's continue. Let's go to the other one, the inverted hammer and then the shooting star, so that we end this video quickly. We are done with the hammer and then the hanging man. We are looking at the inverted hammer and then the shooting star. We are saying here that the inverted hammer and shooting star also look identical. The only difference between them is whether you are in a downtrend or an uptrend. An inverted hammer is a bullish reversal candlestick. A shooting star is a bearish reversal candlestick. Now look at them. So they look identical, just like the hammer and then the hanging man. The hammer and the hanging man were pointing up with their shadows down, but these ones, their shadows are up and then their bodies are down. That is the difference. Let me take you back. Look at the hammer and the hanging man. Their bodies are up, their shadows are down. And then the inverted hammer and then the shooting star, their shadows are up and then their bodies are down. Simple as that. Let's continue. So now, look at what they also mean. Here, this is a downtrend. And then you have an inverted hammer. The same interpretation. It means that, yes, it was for the sellers. And then the buyers came in. They took the price all the way up. The sellers said, hey, what is this buyers trying to do? They came into the market, tried to pull the trade back down, but they couldn't end the trade in their favor. It closed in favor of the buyers. So at the end of the day, we have a very long tail up and then a very small body down. But look at the body. The body is a bullish body in a downtrend. So at what level can you buy? Because if this is a downtrend and it's showing you a reversal, at what level can you buy? After this inverted hammer, you are looking for the next candles to close above the last bearish candle, which is this one. So the last bearish candle, look at the level, which is here. This is the level of the last bearish candle here. So you are waiting for new bullish candles to break above the last bearish candle. And once you have that, it gives you confirmation to start doing what? Buying more. So this level becomes your entry point, your E point, which is entry. Once the bullish candle comes up and closes above the last bearish candle, you have your entry point right there to start buying. The opposite is this one. Look at the shooting star. This trend is an uptrend. And then, yes, the buyers took the trade further up, but they couldn't hold on to that pressure. The sellers came in, drove the price back down, and then they closed it in their own favor. The sellers closed it in their favor. So we have a shooting star there. So after the shooting star, what are you expecting? You are looking for candles that are bearish to close below the last bullish candle, which is here. So this becomes your entry point. So indeed, we have two straight bearish candle, and the second one closed below the last bullish candle. So your entry point is here to start selling, and then you sell further down. It's as easy as that. Now let's take an example on the chart. Let's go to the MT4 and see if we can identify this. We shouldn't just be doing book explanation. Let's do the real practicals and see whether what we are demonstrating is actually true. So I'm taking you straight to the MT4. Now let's look at the MT4. This is the MT4. Look at it here. What happened here? We have a hammer here. Do you see that? This is on daily time frame, AUDJPY. And then what do we have here? Which one is this here? This is what? A shooting star. A shooting star right here. And what happened? So you see it? Just look at it after the shooting star. Price never came above that shooting star. If you look at it, price never came above that shooting star. It went all the way down, 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 down. Look at it here. We had a hammer here. Oh, this is not a hammer. Please, let's be sure. This is not a hammer. Nope. But look at it here. Which one is? I think this is a spinning top. Yes, we had a spinning top here. And then the candles came and then they closed above the last bearish candle here, which was this one. So our entry point is here. So if you entered the trade here, which is your entry point where the candle closed, it went straight into profit. It never dropped down even one against you, not even one pip against you. Just look at it here. This was the level of the last, okay? Look at the level of the last bearish candle, which is here. And then after this spinning top, price came all the way up, broke above the last bearish candle, closed here. So this immediately the price closed, it becomes your entry point. So your entry point is here. You enter the trade here. The second line at the top, this becomes your entry point when the market closed, the candle closed. So from there upwards, the trade never even came against you even 5 pips. It didn't come against you 5 pips. It went straight into profit like that. Now come back to this one here that I showed you here. This one here. This is a shooting star. Now, after this shooting star, we were looking for the candles to close below the last bullish candle, which was here. And indeed, we had that, isn't it? So this candle closed here. So this becomes your entry. Your entry is the second line below here. That's where the candle closed below the last bullish candle. So if you entered your trade here, look at it. How many pips did the trade go against you? It went against you 50 pips. Went against you 50 pips and gave you a profit of, if to this level, 242 pips. If you come further down, 325 pips, further down, 465 pips, further down. So you see, even from where you bought up to this level, it's about 71 pips. If you are looking at the immediate down here, 74 pips came further down here. And if you look at it, the trade never, so assuming if you had placed your stop loss above the shooting star, which is here, the shooting star is here, your trade, your stop loss would have never been hit. You would have made the profit down, down, down there like that. So it's up to you now to look at the various currency pairs and then identify this hammer and then inverted hammer, the shooting star, and then the hanging man. It is your work to do that. Once you can spot them and you can follow the instructions given religiously, you are sure of making some good trades in the market. Is that okay? That is what it is. Maybe let me pick one more pair. Let me pick this one and see. I'm looking at if I can see any of them. Okay. Am I seeing something? It looks like one is here, but I don't know if this looks like one is here. Oh. Anyway, one is here. This is a spinning top here. Look at the spinning top here. Yes. So after seeing this spinning top, you are waiting for the candle to close below the last bullish candle, because this is a bullish market. So you want a candle that is bearish that will close below the last bullish candle, which is here. So this is the last bullish candle. This is the point at which it started. So yes, the next candle came, broke below that. And then if you sold from that angle, your entry point will be here. This is where the candle closed. Your entry point will be here. The second line down. So you sold, right? Yeah, you sold from here. And look at how many pips you would have made. You sold from here up to this level. That is 189 pips. 189 pips. Now, you might be saying that, oh, this is daily time frame, and so maybe it will take me a long time to get one trade. My sister or my brother listening to me right now, if you even find just one trade in a month and that trade will give you profit, will add additional money to your money, it's better than looking for 100 trades within a month that you end up losing money on your own money. Listen carefully. Even if it will take you just one trade, if you will see just one trade, that will give you profit, that will bring additional money on top of your own investment, is better than getting 1,000 trades in a month or in a week or in a day and then losing your money and losing part of your money. Which one is better? Getting just a single trade that adds extra money on top of your money and looking for multiple trades in a day or multiple trades in a week that will end up reducing or taking away some money from you. Which one do you think is better? Think about this wisely and then make good decisions. Don't rush. The Forex market is a very patient market. Your aim is to make extra profit on your money, but not to lose money. So do not rush and be looking for signals daily. Every minute, every second, you want to get a signal. Anyway, we have other time frames, the 4 hour, the 1 hour, where maybe you can get signals very fast. If you find them and you are able to make the signals, that is good for you. But don't forget this. What I'm saying is that take your time. You have about 100 currency pairs. So no matter what, if NZDJPY is not giving you any trade right now because you are not finding a shooting star or a hanging man or whatsoever right now, go to the next pair. The next pair might be giving you a signal, which you don't know. So it's not necessarily trying to get signals every day. Look at it this year. I'm seeing another doji candle, which is a hammer here. Look at a hammer. You had a hammer here. You had another hammer here. Look at them. Oh, this is a spinning top. This one is a spinning top here, but this is a hammer. So spinning top here, a hammer here. And what do you see after that? You are looking for the next candle to close above. Let's take the hammer here. This is the hammer. So this is the last bearish candle. And the next candle that came actually closed above the last bearish candle. So your entry point will be here. Here, the second line up there. So if you took the trade from that angle, you would have made a profit all the way up, without a single drop down. Am I making sense? And how many pips would that be? Let's look at that. How many pips would that be? From your entry point here all the way up here to this level. That is 305 pips. So even if you wanted 100 pips, it gave you just 3 days, 140 pips or 150 pips in just 3 days. Or in a day, In just 2 days, you have over 100 pips. It's as easy as that. So take your time. And then once you get 1 or 2 good trades, even in a month, they will add extra profit to your trading account. It's better than trading, looking for signals, looking for entries, 10, 5 in a day, 5, 10 in a week. And at the end of the day, maybe your $100 account balance will be left with $50. What would have been the benefit? What if you had just taken just 1 trade in a month, and at the end of the month, you got even just $10 on your $100? That's $110. That is profit. A word to the wise is enough. My name is Kofi, your admin for this channel. Subscribe. More videos are coming. I think this one is just going to be a 1 video. On that topic, it's just going to be 1 video. I thought it would be 2, but thank God it's going to be 1 video here. So we wouldn't have multiple videos on this one. So after this video, we're going straight to dual candlesticks pattern. We are done with this. We are done with this. The next thing will be dual candlestick pattern, which is the 3rd to last. I'll see you in my next video. Until then, take very good care of yourself and be good. See you.